Stocks sell at silly prices from time to time. It doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act.
Hey there, welcome back to Finance Zoo channel. Warren Buffett emphasized that stocks could turn into bargains, and it's not about having a high IQ, but having the right temperament to seize opportunities. Today, it's time to delve into the best ways for beginners to invest in the stock market, taking a cue from Warren Buffett. Let's begin. Warren Buffett always reminds everyone that experience is the ultimate key to being a successful investor. When an individual with cash meets an experienced individual, that individual with experience ends up with cash, and that individual with cash leaves with experience. This was Warren Buffett's response when asked about his best investment advice. Warren Buffett is considered one of the best long-term investors, so it's no wonder many people like to listen closely to Buffett's words of wisdom to apply them to their own lives. With that in mind, here are Warren Buffett's investment tips. As Buffett puts it, if you are willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Tip number 1. Focus on long-term goals. Warren Buffett's wisdom offers valuable insight when it comes to the best way to invest in the stock market for beginners. He emphasizes the significance of concentrating on long-term goals rather than being consumed by the rapid pace of life. Time may seem to fly by, but our dreams may struggle to flourish if we are perpetually fixated on the immediate future. Warren Buffett's profound quote, "Someone is sitting in the shade today because someone planted a tree a long time ago," beautifully captures this idea. Just as a tree requires time to grow and provide shade, so do good things necessitate patience and foresight. Adopting frugal living habits early on is paramount if you aspire to achieve financial success like Warren Buffett. Think of these habits as seeds that will eventually yield wealth. Also, Buffett emphasizes in this tip that money doesn't grow overnight. No matter how talented or ambitious you are, some things simply take time to grow. Investment planning should revolve around long-term goals, steering clear of quick fixes like futures and options, often resulting in losses. Warren Buffett, known for his steadfast commitment to long-term investing, advised, "If you are willing to own a stock for 10 years, don't even think about owning it for 10 minutes. This principle forms the bedrock of successful investing. If you're in your 20s and watching this video, view it as a substantial advantage. This is the best tip to follow and begin your stock market investment journey. Listen to this.
Start young. Charlie's always said that the big thing about it is we started building this little snowball on top of a very long hill. So we started at a very early age in rolling the snowball down. And of course, the snowball, the nature of compound interest is it behaves like a snowball of sticky snow. And the trick is to have a very long hill, which means either starting very young or living to be very old.
Tip number 2. Start young or as early as possible. Warren Buffett stressed, as Charlie has always said, the big thing about it is that we started building this little snowball on top of a very long hill. So we started at a very early age and began rolling the snowball down. Absolutely. The nature of compound interest is that it behaves like a snowball made of sticky snow, and the trick is to have a very long hill. This means either starting very young or living to be very old. In simple terms, starting young gives you a significant advantage in building wealth through investments. It's about allowing your money to grow over time, and the earlier you begin, the longer your money has to multiply. This principle highlights the importance of getting a head start on your investment path. Tip number 3. Buy only stocks that you understand. Buffett wisely says, "Never invest in a business you cannot understand." This principle holds great significance. By following it and refraining from investing in businesses beyond your comprehension, you can reduce risks, gain confidence, maintain a long-term perspective, simplify your investment portfolio, and keep your emotions in check. It emphasizes the importance of staying within your expertise, enabling you to construct a portfolio that aligns with your knowledge and convictions, and ultimately fostering a more successful and less stressful investment journey.
We're not going to sell no matter how much anybody offers us for. I mean, if somebody offers us 3 times what something is worth at See's Candy, the Buffalo News, Borsheim's, whatever it may be, we're not going to sell it.
Tip number 4. Don't sell because of price fluctuations. Warren Buffett unequivocally asserts that, regardless of the tempting offers, even if they are 3 times the perceived worth, he will not divest his investments. His loyalty to businesses like See's Candy, Buffalo News, or any other venture remains unwavering in the face of financial incentives. Buffett acknowledges that some may perceive his approach differently, but for him, it's about living life on his terms. Here's Buffett again for tip number 5.
If you have a temperament that when others are fearful, you're going to get scared yourself, you are not going to make a lot of money in securities over time in all probability.
Tip number 5. Warren Buffett always imparts a timeless advice. Be fearful when others are greedy and greedy when others are fearful. As a beginner, this reminds you to be cautious during market exuberance and seize opportunities during widespread panic. Buffett's recommendation revolves around contrarian thinking, which means going against the crowd in investment terms. During market turmoil or times of pessimism, smart investors don't succumb to prevailing sentiment, but instead seek opportunities. In the context of commercial real estate, his words are particularly relevant, emphasizing the need to stay vigilant, especially in the face of rising borrowing rates. This urges you to adopt a discerning approach, recognizing that market sentiment can swing between extreme optimism and pessimism, both impacting investment outcomes. Warren Buffett's wisdom underscores the significance of level-headed, informed decision-making in the ever-changing landscape of commercial real estate, making it an invaluable advice for all beginners. Here's the most important investment principle for the final tip. Tip number 6. Trust yourself to be a successful investor. Warren Buffett's wisdom highlights the importance of trusting in your potential. The greatest challenge often lies in believing in your investment decisions. It's common to question your judgment and defer to the opinions of others. However, Buffett's advice is to remind you to study, gain confidence in your abilities, and remain resolute. This is the right time to reflect Buffett's journey, stating, "I always knew I was going to be rich. I don't think I doubted it for a minute." It will encourage you to recognize the importance of strongly believing in your abilities and long-term goals. Remember, to excel in investments, you must conquer fear and tune out external influences. Accumulate knowledge, make informed decisions that set you apart from the crowd, and forge your path toward financial success. Remember that Warren Buffett's timeless wisdom is a guiding light. His insights, rooted in decades of unparalleled success, offer invaluable lessons for aspiring investors like you. Buffett's emphasis on starting young, trusting in your capabilities, and staying vigilant in market dynamics is a testament to the path you can pave toward financial success. He encourages you to believe in yourself and to make informed decisions, standing apart from the crowd. While the world of investments may appear complex, Warren Buffett's guidance simplifies the path. It urges you to seize opportunities, not only in the stock market, but in life itself. Much like life, the stock market is a journey with its ups and downs, but with the right mindset and a commitment to learning, you can achieve your financial goals and secure a prosperous future. So, as you embark on this exciting venture, remember that you hold the keys to your financial destiny. With perseverance, knowledge, and a dash of Warren Buffett's wisdom, there's no limit to what you can achieve. It's your journey, and the destination is financial success. Happy investing! What do you think about this topic? Let me know in the comments section below. Don't forget to like, share, and subscribe to Finance Soon channel. I'll see you in the next video.